A very good morning to all our viewers who are joining us live on this broadcast here in Moneycontrol. You're watching Opening Bell with me, Stacy, Pereira, and a quick recap of where we left off. And of course, we've been seeing newer highs every day when it comes to the markets, but we are just that kissing distance away from 24,000. We managed to close at that 23,800 odd levels, even touching 900 at one point in intraday trade. But today being FNO expiry session, there could be that volatility, and one cannot discount that, at least if they're getting into today's trading day. But in fact, a whole host of stock specific action is where the market is really likely to see, be it from pharma space or to the likes of an IT. There are brokerage notes that have come out on the IT pack and how one could expect, what one could expect from the Q1 earnings that we're looking forward to, and of course the whole July series and what we can expect there with the budget and a whole host of where the market is heading from here on. We're going to be discussing that with our experts on the show, but before that, let me take you through all the top headlines. Stocks closed mildly higher on Wall Street as key indices posted gains ahead of the release of key inflation data, which is due tomorrow. Asian markets opened largely lower as investors now brace for measures from the Bank of Japan after the yen dips to a near 38-year low. The GIFT Nifty is also suggesting a lower start for the Indian equity market. Brent crude continues to trade around that $85 a barrel, whereas gold prices have slipped to a two-week low on a stronger dollar demand as well as rising treasury yields. On the other hand, you had cryptocurrencies which have given up their gains. The Bitcoin has fallen back near that $60,000 levels after that rebound that we saw yesterday. And in key stocks to be tracking today, you have RBI Bank as well as AU Finance, Small Finance Bank, which will consider fundraising in their board meets today, while also Raymonds shareholders will meet to decide the reappointment of Gautam Singhania to the board of the company amidst that ongoing divorce dispute. And market regulator SEBI is likely to tighten rules for stocks to be eligible for derivatives trade in its board meeting later this evening. The regulator may also ask brokers and mutual funds to stop marketing via unregistered influencers or finfluencers, and easy delisting norms is also something that could be on the agenda. Just 8 minutes to go there on your screens. You can see, and we'll know exactly whether markets are going to go up and up towards that 24,000 levels, or whether we're going to see some bit of profit taking, maybe also a bit of volatility and choppiness, given the fact that it is an FNO expiry session. But let me also take you through a couple of index cues then, and also what the FNO market really is suggesting at this point. We did see Nifty touching that 23,890 levels. That was the high that we hit on the Nifty. So barely 120 odd points, we could say 110 odd points from that 24,000 level. Sensex at 78,756 was the highs that it touched, as well as the Bank Nifty. That one also almost just shy of barely 20 points, or 12 points rather, closing in at 52,988. So just shy of that 53,000 levels there for the Bank Nifty as well. And it was actually the heavyweights that did that for the indices and pushed them higher. Reliance among your top gainers, 4% odd gains that we saw on that particular counter, nearly 100 points coming in there for the Nifty because of Reliance, whereas it was in the auto names that saw some bit of profit booking, especially ahead of the data that comes out by the end of the month. So that's why we're seeing the auto pack take a bit of a backseat. M&M was among the biggest losers there. Market breadth still now in favor of the declines, where your advanced decline ratio is at 4:5. So that says something about the breadth of the market. But if you look at the option cues, there we're seeing the maximum open interest call option writing coming in there for that 24,000 strike, and which is where perhaps everyone's really placing their bets. About 1.33 crore worth of contracts were seen in that call option there for the 24,000 strike, whereas on the put side you saw 23,000 see the maximum open interest at 1.28 crore worth of contracts. So the PCR now stands at about 1.31 versus the 1.38. So just a few basis points that it has fallen, but still above that 1 mark. Now, if you look at the stocks that are in your F&O band, quite interesting here because none of the stocks have gotten out of the band. What has been included is India Cements, and also remember India Cements will now be excluded from the F&O segment altogether after the August series. So that's quite interesting, and yesterday we saw this particular counter see some great action. In fact, the whole cement pack, there is brokerage notes that have come out even on the whole cement sector and upgrading and downgrading a couple of them, and we'll get to those details. But in the band today is GNFC, you have Indus Towers, Punjab National Bank as well as SAIL. So these 4 counters will continue to remain in the F&O band for June 27th. Now, if you look at the fund flows, we did see FIIs again turn into net sellers, selling about 3,535.43 crore worth of equities that they sold in the market yesterday, whereas DIIs did that heavy lifting, tried and bought about 5,103.67 crore worth of equity that was purchased by the DIIs. Now, interestingly, that volatility index has also been correcting after a couple of days of uptrend that we've seen, but it has tested that 10-day EMA or exponential moving average, which was, during yesterday's session. And as long as it stays above this 15 mark, which also coincides with that 200-day EMA of it, we could say that the bulls may still have some bit of comfort there. But the VIX, we did see that index fall by about 1.87% yesterday. So now it's hovering around that 14.05 levels, whereas it was at 14.31. So still tad below that 15 level is where we are seeing the VIX right now. But let's also discuss what kind of strategies you can adopt to when you're seeing this kind of volatility and what we could expect. And joining me for that is Aamar Singh. He's the Senior Vice President at Angelone. Good morning, Aamar. Always a pleasure to have you with us here at Moneycontrol. Let's straight up start with the Nifty. Yesterday it managed to have that flat open, we would say 23,700 levels, and then it extended from there as the day progressed. We saw those newer highs of 23,900 levels also, and now just closing short, we would say, or rather so close to that 24,000 levels. But do you think today being an expiry day, we could see some bit of volatility and perhaps some bit of profit taking even, and that 24,000 might not be something we might achieve? Or you are more optimistic and you think that we could go further upside and even see 24,200 levels for that matter?
Yeah, very good morning, and thank you for having me on the show. So 24,000 is now, I would say, just a question of time. Whether it happens today or tomorrow, we'll have to watch out for, or maybe next week. But that definitely is there on the cards. And also what has really caught the shorts off guard is the ferocity of the rally, because the way the markets have rallied. And also what we could see is that some of the large caps like HDFC wasn't really doing much, and then it witnessed a significant rally from almost 1400 to 1700 levels. Reliance has really taken off. So these are heavyweights which have a major impact. More than 20% weightages in these two specific stocks, and we've seen Axis, we've seen ICICI, we've seen all these stocks, Bharti Airtel also. So we've seen many heavyweight stocks really taking off and trading at record highs. So that bodes well for the markets. And also the other interesting point which you mentioned was that India VIX has also cooled off significantly. So that also tells me that there is not much concern in the market. As far as the data is concerned, overall we are seeing some sort of, because today being expiry, the monthly expiry, so there's likely to be volatility, and also a lot of positions would get squared off, and there would be rollover that would be happening. But having said that, I would say the levels to watch out for Nifty on the downside, somewhere around 23,650, 700. Now that's acting as a strong support. 24,000, yeah, definitely that's a psychological level, but that's definitely within reach, because if you look at the charts from a technical perspective, also on the intermediate or the long-term trend or the short-term trend, they continue to be strong and positive. So that's just a question of time. Overall, any dip is a buying opportunity till the time we see a trend change, which is not happening anytime soon. Also, one of the major market breadth indicators tells me that more than 75-76% of the all the stocks are trading over the 200-day moving average. So that's a sign of a very strong bull market, and that continues to remain so for quite long now. So that's again a very strong positive sentiment.
Right. Aamar, what about the bank Nifty? That one also seeing, those newer highs. We are barely some 12 points shy that we closed off from that 53,000 level. So higher high lows for the second consecutive day. Also increasing volumes, we could say as well, because you're seeing the participation from, like you said, the likes of HDFC, Axis Bank, and the others. Now, yesterday we did close at another fresh high for the bank Nifty, but could we then expect some bit of pause there?
So if we look at Bank Nifty continues to remain quite strong, and see, roughly HDFC Bank has around 29-30% weightage in Bank Nifty. ICICI Bank has around 23% weightage, and then Axis Bank has around 10%. So these together have close to almost 65% weightage. 63-65% weightage, and we are seeing very strong movement there as well. Then we have HDFC around 9 to 10%. So overall, Bank Nifty continues to remain strong, and one important level I would definitely want to give our viewers as far as HDFC Bank is concerned, because if you look at HDFC Bank had earlier made a high of 1721 in December of 23 last year. So 1720, 1730 is a very important zone of resistance for HDFC Bank.
Right. But in fact, I'm going to have to ask you to hold that thought, and we'll come back to that level that you can watch out for HDFC. It is there on your screens, but let's also address where the markets have finally opened on this F&O expiry date. We are seeing that bit of, pressure there coming in for the Nifty. We are below that 23,900 levels, but just about, we would say flat rather, because just about 0.1% of, losses that we're seeing there. Even the Sensex there managing to hold on to that 78,500 levels, we would say at this point, but still in the negative. The Bank Nifty also, like we were pointing out, the mid-cap index though holding out, we would say this time around, about close to 170 odd points that it has added. The BSE small cap also seeing pretty much those the broader markets of the being the outliers at this point, when you are seeing the the benchmarks see that bit of pressure that we were expecting. You're seeing the mid cap and small cap index really hold out. The Bank Nifty, like we were just speaking of, that one also seeing some bit of pressure now, about 130 odd points that it has seen of cuts just at opening, but it has more time to take this trade forward. In fact, we were talking about HDFC Bank among the components of the Bank Nifty, and how it does have such a big weightage, and why that one would be really important to track. But let's also get in a couple of gainers and losers at this point on your screen, so that we know where the pressure is really building in for the markets. You have the likes of Tech Mahindra and HCL Tech, as well as Shriram Finance among your laggards in trade. You also have a couple of IT names that I'm seeing there among your laggards in trade, whereas on the flip side, the gainers, you have the likes of an Ultratech Cement, you have Dr. Reddy's Laboratory, as well as GSW Steel, which was, these are quite the turnaround that you're seeing from the Tata Steel as well as GSW. Hindalco were among your laggards yesterday, whereas they are making it to the gainers list today. You're also seeing the likes of an Adani Port as well as Tata Consumer Products that are among your gainers. But let me quickly go back to Aamar and talk about HDFC Bank, because that's where he was talking about, to keep that level in mind for HDFC Bank, and how that one has, now been performing, and whether there could be, opportunities to go ahead and buy in this particular counter.
Yeah, so looking at HDFC Bank, HDFC Bank was an excellent buy when it had corrected towards the 1400 levels, because that was a very good opportunity, and it's up by almost 20% from those levels. So if we go back, as I was saying, in December of 2023, it had made a high of 1721. And if we go back again, so in July of 23, it had made a high of close to almost 1735. So 1735, and then again 1757 in July of 23. So 1730, 1760. So that's a very strong zone of resistance for HDFC Bank. So effectively, but if you look at the charts are clearly pointing towards trend strength in HDFC Bank. So that seems to be there to stay. As long as HDFC doesn't breach the 1550, 1600 levels, I wouldn't say there would be much of concern. Likewise, Reliance also has got a major weightage, all-time highs around 3,030 or so, trading above that level. Reliance again is very strong. So watch out for these two stocks. They'll give you the triggers as to what's going to happen in index and Bank Nifty.
Right, Aamar, in fact, I'm also going to ask you about India Cements. Today, it's been added in the F&O ban list, but there could have been that block trade that happened yesterday, and Ultratech Cement having bought, and the cement space altogether is also seeing some bit of activity. There was Sanghi Industries also yesterday that looked to pair stake, the promoters looking to pair stake through a block deal. In fact, Goldman Sachs has come out with a report on cements where they say that the elections as well as summers, the temperature could have impacted construction activity, and that's perhaps what we're going to see in Q1. They expect the Q1 industry volumes to be a bit flattish this time around, and the Q4 exit prices between 1 to 2% below what Q4 was, is what Goldman Sachs is saying. They've got a couple of calls that they've made on a few of these counters, like Shree Cement. They've upgraded that to neutral, whereas ACC is downgraded to sell from neutral. Ambuja is they're maintaining a neutral call there, whereas Dalmia Cement also a neutral call, and Ultratech is a buy call. So quite interesting to see what has come out of these brokerage notes. But if you have to talk about the cement pack, Aamar, is there anything interesting that you are liking, and where would you be then placing your bets? And if you have pecking order in stocks, then what would that be?
Cement actually has been on a roll. If you look at most of the stocks, be it Ultratech, again, Ultratech has been very strong on the charts. We've seen some strong move. The stock is up by almost 10% this week itself. If you look at Ramco Cement, again, that seems some sort of consolidation. It's not as strong as the other stocks. If I look at Ambuja Cement, again, seems some sort of consolidation. Ultratech seems amongst one of the strongest, and JK Cement is again one stock one can look at, but it needs to breach above the 4500, 4550 level for any major rally in the cement pack.
Picks that Aamar is giving on. Do stay on with us, Aamar. I'll get back to you and we'll get an answer a couple of queries that our viewers are posting in on our live feed. But let me also tell them a little bit more about a couple of block deals that we're getting to hear of. One such one is of Archean Chemicals. This one now sources say that India Resurgent Fund Scheme 1 as well as the Scheme 2 as well as Piramal's Natural Resources. These are the three likely sellers that could be looking to pair their stake of about 10.13% in the company. The block could have happened at a floor price of about 655 rupees per share, and the deal does come at a discount if you have to compare it to the current market price of about 5.3%. Deal size as a whole, if you go to see what they're pairing, it would come up to about 818.7 crore rupees. So that was what Archean Chemical is looking at. If you look at CBS, now there's a block deal that could happen there as well, and FIH Mauritius is likely to sell about 9.72% stake in CSB Bank. Now CSB Bank, post the stake sale, the Mauritian company will hold about 40% in the bank, and the offer size is somewhere close to 594.5 crore rupees. Remember, the floor price for this then would come at to somewhere about 352.4 rupees per share. This, if you look at the current market price, a discount of about just 1%, and there will be a lock-in period of about 90 days, we could say, for the ones selling the stake. So interesting to see where we're going to, most of these promoters are taking this block deal route of late. Almost, if you just look at past 2 months, we've seen about 65,000 crore worth of block deals that have happened in this space from various, from the likes of a bigger ones like Vodafone, that also Industars that paired its stake in Industar through block deals, and that's where we saw the bigger chunk of the block deals. But quite interesting to see what we're going to see. Another important or another interesting stock that you should keep on your radar could be that of PI Industries. Now this one has gone on to acquire Plant Health Care, this or PHC as it's called, and this for about 32.8 million pounds. Now, Jefferies has already come out with a note on how this acquisition is going to turn out. They've maintained a buy call with a target price of 750 rupees for the share. And they say that even though it's a small yet a promising biologics acquisition, they say that the acquisition is in line and is stated to focus on their growth. It will also give the company access to its product portfolio for major crops across global markets and the annual revenue potential of about $75 million. Now, the valuation is attractive, and based on the new product traction, it is likely to see the relocation of production in India and then could move their businesses towards profitability. At least that's the word that is coming in on Jefferies about this whole, and you're seeing that counter there also up and about post this kind of reaction that it's getting on this acquisition. Interestingly, let's also talk about an important event that is to take place today, and that being the SEBI board meet. Now, the market regulator will be meeting today, and there are a couple of things that are on the agenda. Now, one would be likely to tighten the rules for stocks that will be eligible for derivative trading. This is something that has been in the talks for some time now, and we're likely to hear something about this, or a discussion around this at least between the board members. What we're also given to understand is that they could go on to ask brokers as well as mutual funds to stop enlisting unregistered finfluencers or financial influencers to market for their campaigns. That is something that has kind of ticked off the regulator, and they might want to be taking action in a way that there will be certain norms put in place before you get a finfluencer on board to advertise for certain products. The board may also consider changing the delisting rules to make it easier for companies to exit from the stock exchange, and that is something that could also be on the agenda today. And we'll be coming back to you with all those discussions and also the details that come out from the SEBI board meet at 6 p.m. is when we are likely to hear from the chairperson, Madhvi Puri Butch, and we'll be getting you those details. But let me also talk about, how investors are really thronging in to the stock markets, and why perhaps, now that we are at newer highs is a good time, or whether one should wait for those dips to be entering the market. And joining me to discuss that and more is Siddhartha Khemka. Good morning, Siddhartha. Always a pleasure to have you. Siddhartha is the head of retail research and broking at Motilal Oswal. Siddhartha, let's begin by, we are looking at what the markets have been doing. At least all of this week, I've been coming back again and again and saying that, okay, newer highs, new day. How are we supposed to be treading ahead of this? Or is there any reason to be cautious from here on? And what could those, headwinds perhaps be? Is it just the budget that we are going to be playing a wait and watch till, or there is enough momentum and the markets don't need these kind of triggers? What would be your way of looking at it?
Yeah, very good morning, and pleasure to be on the show. So if you look at the overall market setup, we have been quite positive on the markets, because of the steady earnings delivery that has been coming on quarter after quarter, and we are expecting a steady quarter Q1. We are never far away from a quarter. We just ended Q4 and we are about to end Q1, and the pre-quarterly updates would start coming in from next week. If you look at the global market setup, US markets are at all-time high. Some of the other markets are coming out of the slower growth and going into the recovery mode. That is supporting the global construct. Back home, we have a very strong macro environment, be it GDP growth, be it the advanced tax collection, be it the GST collections, any other indicators, be it the power consumption demand at all-time high, the toll collection. So all those figures points to a very steady and strong macro setup. That leads to us to finally what kind of valuations are we seeing in the market. So Nifty is currently trading at about 20.5 times 1 year forward P, which is marginally above the 10-year average of about 20.3 times. So we are very comfortable. We believe that the earnings delivery could continue, and the market momentum would be there. A, as I said, earnings delivery. B, we have the monsoon season this year, which is expected to be above normal. So that is only going to help improve the demand, consumption demand, which has been the backbone for the Indian economy. Also, that would support the rural sector, which has been kind of lagging for last 1 or 2 years, and that should add to the overall growth in the environment. In the broader market, there could be some churn. We could see sector rotation. A lot of sectors have run up in anticipation of A, government policies, B, some more spending by the government in the budget, and post-budget, we could see some more sectoral churn within the broader sectors. So overall construct, we remain positive on the market, favoring large caps. In the mid cap, sector rotation would continue. Individual stock sector specific action will continue, and any opportunity, any dips in the market will be only an opportunity to add. And finally, to add to it, FIs who have been sellers for last couple of months are now beginning to again come back to the market, and I think that will be a big factor which would support the markets going forward.
Siddharth, just to add to that point, with the bond inclusion, now happening anytime soon, do you think that could be an interesting way that we're going to see these FIIs come flocking in, or do you think equities is enough where they can see, we're going to see them come in all ways and not just because of the bond inclusion?
Yeah, definitely. I think that is a big positive development for India as an economy. You can now raise money in the bonds from the global investors, and that would be very positive for financial. So I think if you look at the overall market construct, Nifty itself, what 38% weightage comes from the banking and financials, and the sector has consolidated for last couple of quarters. And I think from here, the bond inclusion will definitely help reduce cost of borrowings, will diversify the borrowings opportunities for them, and with the interest rate cut around the corner globally, the FIs would be coming in hordes, both through the bonds as well as through the equity route.
Do stay on, Siddharth. Let me quickly go back to Aamar and get a couple of queries answered. And before I answer this particular query, I think Tanuj N wants to know your view on HCL Tech as well as ITC. Now, these are from two different, baskets that we're talking about from the IT pack. But interestingly, there's also a Bank of America note on the IT sector, and they've gone on to give a preview of Q1, and they say that there are fewer instances of cuts in IT spending, and which is why the likes of an Infosys is perhaps going to fare well or better in these coming quarters. Company has guided as well as that they've remained in that stable level of what their guidance has been. Easy supply side dynamics makes it easy for a margin picture as well. Infosys could in fact go on to lead its peers on the top line performance for Q1, as well as what Bank of America is saying is that they could see a margin dip for HCL as well as a flattish margins for Tech Mahindra versus what is expected to be an uptick for the others. Quickly, Aamar, to you could also answer this query, if that could give some light to Tanuj in terms of what Bank of America is also putting out there for when it comes to the margins of HCL Tech. But when you look at the chart specifically, what does it say for HCL Tech, as well as we'll give him an outcome for ITC as well. So first go on with HCL Tech.
Yeah, so looking at HCL Tech, we are seeing some sort of consolidation there in HCL Tech. And till the time we don't see the stock sustaining above the 1480 levels, we could witness some sort of consolidation. In the IT space, Infosys definitely looks better technically on the chart. So that's one stock from the IT space one can look at. HCL Tech is more or less consolidation, what we are witnessing.
Right. So you're seeing consolidation in HCL Tech, and maybe, like Bank of America, when they're looking at Infosys to rather be the, the one showing a better performance this time around. What about ITC, Aamar? How is that chart looking?
So looking at ITC, I would say is simply a stay away right now. It's not going anywhere. It's clearly in a consolidation zone. I would say 400, 440, that's a range. Towards 400 could be a short-term buying opportunity, but there's no trend in the stock even from a long-term perspective. So rather stay away from ITC.
Right, so stay away is the call that Aamar is giving for ITC, at least at this point. Siddharth, back to you then, and I'm looking at the pharma space particularly. Yesterday we saw, quite a bit of activity. Rather, we are seeing the resurgence of how the US FDA is coming out with different inspections on, the likes of a Cipla or a Lupin. Then you're seeing today there is news on Dr. Reddy's and how that has gone on to make an acquisition, although Jeffrey still has an underperformed call on Dr. Reddy's, and they say that this what Dr. Reddy's has done is it has gone and acquired a brand, an OTC brand in the nicotine replacement therapy or NRT in their non-US market, from their non-US market. Now this brand is, they say that this growth rather from this brand will remain quite stagnant at this point, and it won't really gain them much. These OTC brands will require upfront investment, which could go on to even take away from Dr. Reddy's itself. The impact of the synergies from the acquired portfolio should start reflecting only by FY27 and 28. So this is what has come out from Dr. Reddy's. That counter though is up and about. You can see in trade, it is an acquisition after all that has happened for this particular counter. But you also saw the likes of Sun Pharma a couple of days ago that was down and about in trade. How is one to be looking at the pharma space? Is there more that one could actually see opportunities and value within this space, at least in the near term?
Yes, I think if you look at the overall pharma space, the sector had been under pressure for a lot of quarters on back of weak demand in the key markets. Realizations were down and margins were suppressed because of rise in key raw material prices. Having said that, the key positive that the industry was facing is a positive regulatory environment, which is now looking like is again turning adverse. We are seeing a lot of companies getting the observations from 483, which is kind of tightening the nose on some of these pharma names. If you look at the quarterly results, I think the numbers were quite encouraging. The sector has now last 2-3 quarters have been reporting improving numbers in terms of Y-on-Y growth. There is reduced intensity of price erosion in US generics. Raw material prices have come down, and some of the companies have launched niche products, which is driving growth. So US, what we saw is a growth of almost 13% on an aggregate basis. This is the 7th quarter of healthy double-digit growth in the US generic. So that goes on to show the kind of improvement we are seeing. But again, the sector will always get impacted if there is a firm 483 or observations. Today we saw Cipla getting some observations after the inspection at its Goa site. But if you look at, we await the clarification in terms of what exactly is the observations and how much impact it could see. But we feel that Cipla is on track to file some of the complex products from across its other facilities. We are expecting a 12% earnings CAGR for Cipla and a healthy pipeline of niche products, plus a good branded generic segment. So looks good to us. Any dip would be an opportunity for long-term investors. We have a buy rating on Cipla with a target of 1700. Dr. Reddy, the acquisition looks good. Valuation of 2.3 times on CY23 sales is fair. We believe in the current numbers, the current year numbers will marginally get improved by about 3% for this year and about 5 to 7% for the next 2 years. So it's a good addition to the overall consumer healthcare segment and extends its OTC reach. But overall, we believe Dr. Reddy currently trades at a premium valuation. Again, they have some observations. So we have a neutral rating on Dr. Reddy's.
Right, so neutral rating on Dr. Reddy's, but the pharma space does have pockets that you could find opportunity in. Let me go back to Aamar then and a couple of queries that we'll try and answer. Now we are towards the fag end of the month where we normally see, auto sector really, showing some bit of profit taking rather. And yesterday, if you have to look at the top laggards, it was from your auto pack. M&M was among the ones that were down and about, but you also had the likes of Tata Motors that has been really holding holding out. In fact, there's a query also coming in on Tata Motors and how that particular counter is looking. There was a brokerage note a couple of days ago on this as well, where they said that, JLR has actually started turning around for the India performance has actually started turning around and better compared to what we've seen the US and EU markets as well do for Tata Motors. So how is that chart really looking, and is there enough reason to be looking at, and what are the levels that you would suggest to one if they wanted to either perhaps buy, sell or hold at this point?
See, as far as Tata Motors is concerned, clearly the trend, I would say the momentum is no longer there, and that will not go away in a short span of time. It's gone into consolidation, and that's what the charts are depicting. Yes, clearly the recent low of 855, currently it's around 950. So 850, 860, that's a very strong support zone. I don't see that being taken out. That's a very crucial and important support, but otherwise I don't see a trend materializing in Tata Motors anytime in the short term. So it could be in for some consolidation. Upside seems to be capped around 970, 1000. And downside, as I mentioned, 850, 860, that's a major support zone. Right. Because on the intermediate term trend, the stock isn't going anywhere.
Right. So the stock hasn't been trading much. You're not seeing any big breakout. So maybe you'd want to, track those levels that Aamar spoke about when it comes to Tata Motors. Siddharth, finally to you did mention that we're going to see some bit of sectoral rotation. Yesterday, in fact, if you just look at yesterday's trade where we saw the heavyweights again become those, the ones that you can place your bets on. But today's trade, you're looking at how the mid cap and small cap are the ones actually holding out in such a market where you're seeing the benchmarks buckle under pressure. So if you're looking at a sectoral rotation, which are the sectors, or even between the mid, large and small caps, how should one be placing their portfolios at this point, and what are the sectors you think are the next booming sectors?
Yeah, I think that's a very important question, given that a lot of macro events have lined up, especially the budget. As I discussed earlier, the one sector that we like is the banking and financials, both within the large caps as well as within the mid cap space. We feel that the growth would be pretty strong, led by the corporate side or the industrial capex that is going to pick up. The interest rate cut cycle that is likely to start by end of this year, and see valuations being very comfortable for them. Apart from that, consumption, both staples as well as discretionary, we believe could continue to hold on, and within discretionary there is a large space out there, right from auto, real estate, building materials, consumer durables. So that entire segment we believe could be a big beneficiary, especially from the budget, where we are expecting government to focus a lot on housing. So you will see sectors related to the building materials, cement doing well for the next couple of quarters. Post that, some of the capex themes, industrials, that is something that we like, because again, that is a sector that is doing well. Order inflows are at record highs. Execution has picked up. So be it capital goods, be it some of the other infrastructure companies, constructions, railway, defense, power, utilities. So those are the other key segments that we believe would do well in the next couple of quarters.
Right. So there's a lot of cherry picking that one can do, and a lot of array of stocks that you can actually choose from. I'm quickly going to ask Aamar to wind up with answering one last query, and this one's coming from Maheshwar Bhanu. He wants to know your view on Union Bank, and he's asking why the share has been falling for the past 3 weeks, and what's the outlook on a medium to long term, and whether it's worth adding more at this current level. So what are the charts really saying for Union Bank, and also the fact that today we are seeing a lot of activity from the smaller banks. You have AU Small Finance Bank as well as RBL that are looking to be raising funds. Are these opportunities for that people can take, and also answer the Union Bank query?
See, Union Bank has made a top, so I don't think it would be a good idea to get into the stock right now. It definitely seems to have formed a top. It has got good support coming around the 128, 130 levels. Currently, it's around 140. I wouldn't recommend buying in this stock anytime soon.
Right, so stay away for Union Bank at least for now is what Aamar has to propose. Well, right now the markets are pretty much, we would say, in that flattish range, or rather more in the negative at this point, but quite flat, but we're completely out of time. We do have a lot of activity that is also happening within the primary market space, and if I have to take you through a couple of them, today is the last day, or rather the subscription closes for the likes of an Allied Blenders and Distillers. Remember this, so far it was booked by about 1.52 times in the 3 days that it was open, whereas you had Viraj Iron and Steel, that IPO, the second day of this IPO bidding will be open, and that has already seen somewhere 3.47 times the subscription that it had put out the shares for. So that's quite interesting to see what we're getting in the primary market space. But for now, our markets are perhaps taking that little bit of a breather or a pause, but we'll wait and see how it transpires through the day. Of course, today is the F&O expiry, and which is why you're going to see this kind of volatility. But let me finally thank both my guests, Siddhartha Khemka of Motilal Oswal as well as Aamar Singh of Religare from Angel One for giving us their time and speaking with us, helping our viewers with their queries. And also to all our viewers, do keep writing in to us on our feed, and we'll try and get your queries answered by our experts here on the show. But for now, it's a goodbye from the entire team that puts this piece together. Thanks so much for tuning in. Also, do post us your feedback and write us in the comment section below. Do follow us in the link at the bottom of your screen. And for all your other updates, come back right here to moneycontrol.com as well as the Money Control app. I'll see you soon.